The charts are whispering a new trend, a bullish pattern that promises a massive breakout. Yet, the money flowing into the market tells a different story, a tale of caution and limited recovery. What's happening with Shiba Inu? Let's break down the data and uncover the truth behind the $351,000 net inflow that has the entire community on edge. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. The current narrative surrounding Shiba Inu is a study in contradiction. On one side, the technical indicators are flashing green, suggesting a significant price reversal is imminent. On the other, the actual flow of capital into the spot market remains stubbornly weak, preventing any sustained upward momentum. This script focuses on the large wallet investors, the whales, and their recent tepid activity. The $351,000 net inflow is the focal point, representing a small, almost negligible positive sign against a backdrop of persistent outflows that have dominated the market since late August. This conflict between technical strength and fundamental weakness is the key to understanding Shiba Inu's current price action. The question is whether the technical setup can force the whale's hands, or if their caution will ultimately win the day. The main event today is the modest, yet notable, $351,000 net inflow recorded on December 3rd, 25. This figure represents the total capital that moved into Shiba Inu spot market wallets, net of any outflows. While any positive inflow is technically a sign of accumulation, analysts note that the magnitude of this movement is extremely small, especially when compared to the persistent outflow trend that has characterized the market for the past 3 months. This small net positive is being interpreted as a brief pause in the selling pressure, rather than a decisive shift toward bullish accumulation by large wallet holders. The data suggests that while some whales may be cautiously dipping their toes back into the market, the majority are still sitting on the sidelines, waiting for a clearer signal or a more forceful technical breakout before committing significant capital. The market's reaction to this mixed signal has been predictably muted, yet the price action itself shows a glimmer of hope. Shiba Inu is currently trading at 894 units, a figure that represents a modest 5% intraday recovery. The 24-hour trading volume stands at $173 million, and the market capitalization is over $5.2 billion. This recovery, however, is being capped by overhead resistance. The price remains confined within a long-running descending channel, a structure that has governed its movement since the second quarter of the year. The small net inflow has not been enough to generate the buying conviction needed to challenge the upper boundary of this channel. Instead, the price is consolidating, showing short-term momentum but lacking the structural support from capital flows to sustain a true breakout. The price movement is a reaction to the technical setup, not a reflection of whale-driven demand. The technical evidence is the most compelling argument for a potential recovery. Analysts note that Shiba Inu is forming a classic falling wedge pattern on the weekly chart. This pattern is typically considered a bullish reversal signal, suggesting that the selling pressure is exhausting and a sharp move to the upside is becoming increasingly likely. Furthermore, the short-term chart shows that Shiba Inu has broken above its supertrend resistance near 826 units, a move that has flipped the parabolic SAR dots below the price, signaling a shift in short-term momentum. The Relative Strength Index, or RSI, is recovering toward the 50 mark, and the Moving Average Convergence Divergence, or MACD, is still leaning bullish. This technical strength is what the title refers to as the bullish technicals. However, the on-chain evidence of the $351,000 net inflow is the counterpoint. It confirms that while the chart is ready for a move, the large-scale accumulation required to fuel it is simply not present. The implication of this data is clear. The market is at a critical inflection point. Analysts suggest that the small net inflow is a sign of cautious accumulation by smaller, more agile whales, but the major players are still hesitant. The persistent outflow trend since late August indicates a long-term de-risking by the largest wallets. For the technical bullish pattern to be validated, a decisive move above the mid-channel resistance near 988 units is required. Analysts note that a daily close above 1,100 units would signal a trend reversal and open the door toward the next major resistance levels. The risk, however, is that the weak spot flows will cause the technical breakout to fail, leading to a retest of the strong support near 650 units. The $351,000 inflow, while positive, is a stark reminder that the structural weakness in capital commitment is the primary factor limiting the full potential of the bullish technical setup. The Shiba Inu community, often referred to as the Shib Army, remains highly engaged, though their sentiment is mixed. On social media platforms, community trackers show a focus on the ongoing development of the Shibarium Layer 2 solution and the token burn mechanism. Developer hints continue to emphasize the long-term utility and ecosystem growth, attempting to shift the focus away from short-term price action. However, the lack of significant whale accumulation is a source of frustration. Forum discussions suggest that many retail investors are looking for a whale signal to confirm the technical breakout. The community is actively tracking the burn rate, which, while not directly tied to the spot flow data, is seen as a key deflationary mechanism that could eventually force the hand of the large holders. The general sentiment is one of cautious optimism, fueled by the technical charts but tempered by the reality of the weak capital inflows. The short-term forecast, 1 week, 1 month, is highly dependent on the immediate resistance levels. Analysts suggest that a break and hold above 988 units would confirm the short-term bullish momentum and could lead to a quick move toward 1,100 units. Failure to break this level, however, will likely result in a consolidation phase, with a high probability of retesting the support at 826 units. The long-term forecast, 3 months, 3 years, remains bullish, provided the falling wedge pattern plays out. If the pattern is confirmed, a multi-month rally could target the previous highs, with some analysts projecting a move toward 1,350 units to 1,500 units in the medium term. The key metric to watch is the spot flow data. A sustained period of multi-million-dollar net inflows is the only thing that will validate the long-term technical forecast and overcome the current structural weakness. A balanced opinion must acknowledge the significant risk posed by the weak spot flows. While the technical analysis, including the falling wedge and the short-term super trend flip, provides a compelling bullish case, the absence of strong whale accumulation is a major red flag. The $351,000 net inflow is simply not enough to absorb the potential selling pressure from the overhead resistance, or from whales who may decide to take profits on any rally. The risk is that the technical breakout is a false flag, a move designed to lure in retail buyers before a final capitulatory drop to the major support at 650 units. Investors should exercise caution and wait for confirmation from both the charts and the on-chain data. A true sustainable recovery requires not just a technical pattern, but a significant multi-million-dollar commitment from large wallet holders. The charts are screaming breakout, but the wallets are whispering caution. The $351,000 net inflow is a tiny spark in a market that needs a bonfire of whale accumulation. We've seen the technical setup, the falling wedge, and the short-term momentum flip. But until the big money decides to join the party, Shiba Inu remains in a high-stakes standoff. Keep your eyes on that 988 unit resistance. The next few days will determine if the technicals can overcome the weak spot flows, or if the whales will keep us waiting. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it, and subscribe to the channel.